Peter Eliades with you, Stock Market Cycles update for the week ending April 3rd. We're beginning to record this around 4:08 p.m. on Sunday, April 5th. Probably won't be online for another hour or so. This is going to be a relatively long update because we have a lot of things to tell you, along with the market analysis itself. Let's talk first about what we're looking at in the future. I know a lot of you are excited about this software and can't wait to get your hands on it. I couldn't wait either. And it is fabulous software, and some additions have been made already, and there are more to come. Here's what the plan is. The application has been sent into TradeStation. Now it's a process of waiting for them. As soon as they accept the application for a TradeStation add-on, then we'll be clear for those of you that have TradeStation out there to use the program. We have not yet determined pricing for it, whether it'll be probably on a monthly leasing basis, because that's the way most of the TradeStation apps work. So that's the way it'll probably be priced, but that's not for sure yet. But it's that close. The application is in. If you do have a TradeStation account, call them up. Tell them, hey, come on, we want Peter Eliades software. And who knows, that may speed up the process a little bit. But it's ready to go, folks. It is ready. That's point number one. Point number two is a lot of you out there are going, oh, no, I don't have TradeStation. What am I going to do? And the answer to that is on the website, the Stock Market Cycles website, and it's not there yet, so don't bother looking for it. We're going to be able, hopefully, to implement the software. So you can go to the website. We will have a data feed there for most of the indexes, whatever, and probably some individual stocks too. As far as some of the commodities go, and gold and silver, that's not firm yet, but most likely you'll be able to work with those too. And how will you do it? You will do it by becoming a member on the website for these particular, for the particular usage of the software in association with whatever index that you want to use it for, whatever you want to analyze. Hopefully it'll be available for you there. Okay. Well, okay. How about the videos? Well, for about 6 months now, we've been doing these videos. It has been a labor of love because, as you must know by now, we love the market and we love analyzing the market. But it takes a lot of time, it takes a lot of effort, and it's something that we have done for, I don't know, I guess it's going on 50 years now. I mean, we started doing this back in the late 60s, so you figure out how many years that is that we've been analyzing the market. We have always charged for our work before, and this 6 months has been the only time we have done something this extensive without charging for it. So what is ultimately going to happen, I believe, that's what the plan is now, is also on the website. You will be able to go, again, don't try it now because it won't work. You will be able to go to the Stock Market Cycles website, become a member for either the software by itself, either the videos by themselves, or the software and the videos together. So they will continue to be available. We will continue to do these videos. Don't know if it will be on a daily basis like it has been now. And yes, they will be charged for. So take advantage of the free ones now. They'll be going on probably for another few weeks anyway. But ultimately, they're going to be charged for it. And I think any of you that have been watching it for any length of time will agree that it's worth it, okay? That's all I'm going to say. No further promotions. I don't consider that a promotional. That's mostly informational, so you'll know what the plans are for the software. We're getting close to culmination here for a long, long process of work. Stefan and I have been working on this now for well over a year, as most of you know, and we started doing the updates about 6 months ago using the software and bit by bit having the software improve. Let's get to market analysis. This, as it says on the chart, is a daily AD line of the New York Stock Exchange. And this is a channel that we've drawn in. Now, let me say on a technical basis, you don't usually have a channel defined until you have 4 points. At least 4 points, preferably 2 on the top and 2 on the bottom. So you can't really call this a defined channel because we have 2 points up here and a third point down here, but we need another point of confirmation because it's just tentative to that point with the 3 touches. Okay, but here's what's happened over the last couple of weeks. We had this channel. This one starts at the Christmas low here in 2018. Now, you may look at that and say, oh, wait a minute, you're cheating there, Eliades. That line goes down lower, and the channel's not starting where the line is. Let me assure you that it is. It just has something to do with the charting. In fact, let me zoom in on that for you and show you that the line begins exactly on the channel, okay? Begins exactly on it. When we go out on it and it gets thicker, it looks like it's not starting exactly on that bottom line here. But it does that. Take my word for it. And these are exact points also. I'll try and give them to you on the dates. April 12th of 19 and Jan 17. Is that the 17th? Yeah, 17th of 20. So those are the external points. 2 here, 1 here. Now look what happened. On March 16th, we broke convincingly below that channel. And what happened after that? We came back to it from underneath and have started down again. That, my friends, as most of you technicians know, is a negative configuration. You break a pattern to the downside and you come back from underneath to test it and then start down again. That's negative. If it happened the other way around at a top, you could make it positive. You go above it, come back and test it and go up again. But now a negative sign has been given. So that kind of colors everything we look at from this point on in a negative fashion. Now, can it go back and test and get above it again? If it did that, then you'd have to consider that to be bullish, at least short term. In fact, we can come up and test from the underside again, which we might well do if we reach some of the projections that are outstanding. But I wanted to show you this chart because I think it's important, and it is a negative chart for the market overall. Okay, with that having been said, let's now go to our most important product, and that is our projections. Okay. This should look familiar to you. Let's take a look at this one right here. Does that look familiar? Sure it does. This happens to be the NDX. And by the way, let's look at the NDX while we have it here, because the same thing is happening. It gave a projection up to here. And now on the NDX, you almost met that projection. I mean, for practical purposes, you maybe could say that, hey, came real close to meeting that. But on the SPX, we have not come that close to meeting it. And that's the one with this, by the way, that just popped up. That's something new, folks. We're going to show you that in a moment, but it's a little too early to show it to you now. Some further programming by our little wizard, Stephen Sherman. And it's something I asked him to do, and it was really tough to do. It was really tough to find the right software to work with to do it, and it was really tough to do it. I'm going to show you what he did in a second. But let's catch up with our review here. Remember, this projection was given by the S&P Cash. This is a closing price projection. It called for $26.99.42 up to $28.65.50, rounded off. So, projection was given, and in fact, when it was given, let's go forward. I'm going to talk about the next longer projection after that. But look where we are. We told you all along the only way to invalidate this upside projection would be to get back below the offset lines again. Look what happened on Friday. Right down smack to this offset line. And as you know, in the overnight market, in fact, let's go to a market including Globex. And now I got what I wanted. This is including Globex. So this is the rally in Globex. Doesn't look like a big one, but it's almost 40 points. We're talking about 1.5% to the upside now. This is overnight, so we don't know where it's going to close tomorrow. But we have to follow this closely the next couple of days because you have some leeway Monday, tomorrow. But if you're below both of these lines by Tuesday, which is right here, then you've invalidated this upside projection. Now, it's also important what the next longer projection shows, and we're going to show you that now. And this is also a good time to show you what's been added and implemented in the software. So this is a 12.1 to a 13.8 trading day offset, which gives you, that's 2.5 weeks, gives you a nominal 5-week projection. And note that a projection has been given, 26.75.50 to 28.12.50. Now some of that is in the same window as the nominal 20-day projection that we just showed you. So we talked about that if we came down for a while and then went up, we could get a matching projection. So this projection is outstanding. Now, this looks like a lot of mess in here. And what I told Stefan was that, and I've showed it to you folks before too, imagine this red line and this blue line, 12.1 to 13.8. For my purposes, I want there to be a continuum. In other words, I want this whole area between 12, right up here, between 12.1 and 13.8 to be considered when giving projections or invalidating them. Now, it's almost impossible to show that visually because you'd have to make an infinite loop of these prices, 12.1, 12.2, 12.3, 12.4, color the whole thing in, and then you could follow the process of the offset. Well, this space in between the two offsets I call a continuum. And I challenged Stefan a long time ago to be able to present that continuum. I can't tell you how difficult that is to do software-wise, especially with fractional offsets. See if you can find one of your programming wizards to do something like that. And this is what was come up with. Okay, here's the one that I want. And this matches the chart we're looking at. 12.1 to a 13.8 day offset. Let's zoom in on this so you can see what's going on. See the shaded blue here? That's the continuum that I'm talking about. So if you took the red line and moved it over to the 13.8 day offset, it would be shaded like this. That's the continuum. And believe me, this was very, very difficult to program. It's not as complicated now when you have 12 to 13, but when you have ups and downs and you have longer offsets, it becomes a increasingly complex picture. The reason I want to be able to show these graphically is because now you can follow the blue line, and again, because this is closing projections, let's get rid of, here it is. Okay, we got rid of the bars. Now we just have the closing price, which is the blue line, along with the red line to the other, the 13.8. Now we can get rid of those too. Let's get rid of the short offset and the long offset, and all you have now, which is really all you need, is the prices with the continuum. This, in real time, goes forward and shows you if you did a continuum from a 12.1 to a 13.8, what it would look like. And notice now that by Friday, you're almost completely outside that continuum to the upside. And if you get there, we'll know for sure tomorrow if you get there, this will be up here somewhere and you'll be above the continuum and you will confirm this projection up here. Now this projection should be able, it'll show it, there you go, 26.75.50 to 28.12.50. This, my friends, is a work of art, showing the shorter offset to the longer offset in a continuum Going forward, you'll know when your price gets above or below it. And as I said, as of Friday, I think you're a tiny bit inside the continuum, so you don't have a complete validation to the upside of the projection. Any kind of big move up here on Monday should do that. So that's what we're looking at. This is the new programming. It's going to be part of the program that you will get to use. Believe me, it's a fabulous process and a lot of work and wizardry as far as I'm concerned by Stephen Sherman. So we can get rid of that for now. So now you see where we stand. Now here's the interesting thing. We can invalidate the 7 to 8 day offset, and that will happen unless we get above a certain price by Tuesday. But at the same time, this offset, the 12.1 to 13.8, which is 2.5 weeks, nominal 5-week projection, this could remain in effect. For this one, you only have to stay above the offset lines right here. And that does not require, that just requires sideways movement, as long as you don't go down in a big way over the next several days. So the picture remains a little bit complex here, but it's something that we can follow very easily from day to day with the projection software. Okay, we're going to close out this long update by showing you the NDX projections. Those are important now too. Okay. Here we have 20-week offsets, nominal 40-week projection, closing prices, NDX. We showed you how we came close to invalidating them a few days ago. Now, this is the kind of chart that it would be interesting to look at the continuum. So let's see if we can bring that continuum up. 96.8, here we go, right here. So look at this. Here's that downside projection. Here's the continuum here. Let's get rid of the bars and use only closing prices, and then let's zoom in on this continuum. Okay, you see what I'm talking about? Right here, you got back inside the continuum. Now, you were well below it this whole period of time here, so the downside projection remained very much in effect. On one day here last week, you called it into question by sneaking just a tiny bit inside the continuum. But except for that sneak move inside there, you've been below it and remain below it. And you can see that very clearly because now this continuum is plotted showing you the offset lines from day to day and the continuum between them. So we're looking at where they closed on Friday, April 3rd, right here, well below. So the downside projection remains very much in effect. Way down, 53.67.42, 61.59.51, okay? You need to get above these offset lines to invalidate that. So you can still probably get the rally that we talked about, going to the nominal 7 to 8 day and 12.1 to 13.8 day offsets. It might be close because that's 4, 5, 6%. But we could get up here again on the NDX, not invalidate the downside, but fulfill the upside of the other projections. If that happens, it'll be masterwork by the projections. I'm not claiming that that is going to happen, but it's a possibility. Okay, so now one more chart, and that is this one right here. We have two offsets on here. We've got the 189 to 194 and the one that we just showed you, the 96.8 to the 110.6. So here's what we want to look at now. And let's look at this downside projection down here. Now it shows in gray because it got invalidated down here. But look how low this projection is. I mean, we're talking about a move from 97 to 50. That's a 50% decline, folks, that's being projected. Now, it's still being called into question here, so we can't be really confident about it yet. We start getting down into these levels, down here, then we're pretty confident about this downside projection here, okay? And it doesn't mean it happens in the next day or two or even week or two. It could happen out here somewhere. But this would become the projection again. And that's where we stand. This has been a long update. We've had a lot to tell you. We hope we've been helpful. We're going to be back online again Monday afternoon, evening to follow up on what's getting a little complex here, but easy to follow. And we hope you're following along with us. Thanks a lot for watching. Haven't subscribed yet, do so. You'll know about all the updates. Please give us, if you have it in your heart, some favorable commentary. If you want to criticize, go ahead and criticize, but give us a reason. Thanks for watching.